You are looking live at a daily chart of the Nasdaq, which essentially had a follow-through day today, which today is June 5, and welcome to my daily review. 5 is a lucky number for the Nasdaq. Wednesday, June 5 certainly was. This is essentially like another follow-through day, and it's just a breakout. You can see the gap and go there where the Nasdaq was up 331 points or 1.96%, closed at 17,187, which is right at the high of the day. The last tick was the highest tick. So good for the Nasdaq as it breaks out to new highs, an all-time trading high and an all-time closing high, and all-time highs are bullish for the index. Your stocks, should be near or at the highs as well. And if they're more than 10 or 12% off their highs, then you might want to analyze them a little bit. Anyway, I'm just going to point out something here is today was a gap and go day, which is opposed to Monday here, where come back to Monday where it gapped higher at the open and then sold off. And I was telling you, always wait. I always wait here. And if you're too quick, when the fools rush in, 20 minutes in, it's at the high, and then halfway through the day, it's at the low. So you feel kind of bad chasing stocks. And so I always allow an hour or so for the market to prove himself. So today it gapped higher. You can see the gap here from Tuesday. This is a closed Tuesday, the open Wednesday. So you wait, and it's going higher. It's not doing this, right? It's not showing weakness, 20 minutes, 30 minutes in. There's 40 minutes in. There you are, 55 minutes in, and this thing is ticking higher. So yeah, you might pay a little more, but you have the conviction on your side, and it's just like insurance. To wait, you just wait, and you might pay a little more, but you wait and get that confirmation signal from the index anyway. I don't trade indexes, I trade stocks, but I do have to acknowledge the S&P 500. So you look at the Nasdaq, and it's a breakout to new highs. And it looks like it's a little extended there. It's 5% above its 50 SMA. When it gets to 6%, it starts getting wonky. But if you look at the S&P 500, this looks like a breakout. If I just go to the the SPY, the S&P 500 ETF, you can see that this is just consolidating in the base, consolidating near a buy point, pulls back to its moving average here, and now boom, today's the breakout. So to me, this is just the start of something. As Michael Jackson would sing, you want to be starting something. It looks like the S&P is starting something. And if you don't want to buy individual stocks, you want to play along with the S&P. I use UPRO, which is a leveraged triple 3 times the S&P 500. It's 3 times up and 3 times down. So just be aware, you have to have conviction to be in a triple levered ETF. So anyway, just wanted to point that out. The IWM, not as much as it was up 1.5%, but you could see that it's just bouncing and still consolidating in this cup and handle. So it's a little bit laggy. And the Dow Jones, I wasn't going to do this, but I'm going to do it anyway. And this is under the 50 here. It hit that 40,000 and just sold right off. And now I'm sure it's going to have a little bit of a resistance there at the moving average, but my guess is it'll take another shot at that 40,000, and the next time probably trade through it. But it's a lagging index, only 30 stocks, not one that I really pay attention to, but I have to get to some of the stocks today. This is Apple. Like I said, with the index at all-time highs, your stock should be near or at all-time highs. And this is Apple with a base on base pattern here. You can see this base on base, the old Dolly Parton pattern. And I think it's going to have resistance at 200. I think I had it on our buy list this week at 193. So I don't know, you just got to take it a day at a time. It might just trade right through that 200 level. Looks like it's doing it after hours, but just take it one day at a time. I don't know. Just take it one day at a time. I like Apple. It looks really good. Base on base patterns, this looks fantastic to me. And yeah, it's been a long time since this has made new highs. So, Apple looks fantastic. Microsoft, another one, in the $3 trillion club here at the 3.15 trillion. And this one just pulled back to its 50, still consolidating in a base. it did trade, trade below the 50. Now it's above all its moving averages. So that one looks good as well. Meta Platforms, when the index is up like this, the Nasdaq, that these mega cap tech stocks are driving the train here. And Meta, we talked about it on the day that it happened, this pullback on this earnings report, a fantastic earnings report. It's just they said they're going to spend a ton of money. They're going to pay Nvidia for chips, basically. But anyway, today it traded above its 50 here. So Meta just consolidating in a base. This looks fantastic as well as I look at the weekly chart. You can see the consolidating there, 9 weeks, depth in the base, 22%. Now trading above the 50. This thing looks this looks like a buy to me. And I like it above the 50, it just depends what type of trader you are, what type of time frame. But I know some folks who bought it this day and they're very happy today. And I still think you could buy it today anyway. I'm going to move on. Nvidia. Now everybody wants to say that there's a photo going around the social media that Jensen Huang is signing some woman's shirt, in the breast area, and people are saying that Jensen is a sign of a top for Nvidia, and that's a bunch of malarkey. There's no signs of a top in Nvidia. There's no sell signs for me. It's just if you want to, if it's getting too big for your portfolio, as it is for mine, and it's making you a little uncomfortable, then you should trim some. But this is not a sell sign. When a stock tops, you'll see, going up and up like it is, but you'll see, big volume, like everybody's in the boat. And like I've mentioned before in the past, there's 7,400 mutual fund ownership here, and Microsoft has over 10,000. So to me, there's Nvidia is still under owned. Yes, it hit the 3 trillion club, and yes, Jensen signing shirts, and that doesn't mean it's a sell at all. And I'm just going to go back to the base. You know how much I like bases and buying stocks near bases. So this one just consolidated in a base, and it broke out from that 974 area. And most times stocks go up 20 to 25% before forming another base. And that's all this has done. When you get too excited, yeah, it's at 3 trillion. It passed Apple in market cap, but that doesn't matter. I mean, we've never seen a stock like this, this large with triple-digit sales and earnings growth. And all indications are that the AI revolution is just beginning. Nvidia is going to be the king, and who knows, this could go to, well, some people think 10 trillion, and I'm not going to argue with them. And to me, this is my largest holding. If it grows into 40 or 50% of my portfolio, so be it. But yeah, just trim along the way. It is getting a little extended from that 10 EMA. It's 10.1% above the 10. So, if you want to trim some, there's probably going to be some selling around the stock split, which is, if you own it by Friday, you get the split next Monday. So it'll split, I don't know, right now about $122. We'll see, 123 after hours. But this is the king of AI, and like I said, I don't see any sell signs. And it's really helping the portfolio. It's helping pay the bills right now. So Nvidia is just, I think, one you have to own. All right, so Nasdaq at an all-time high. I mentioned that some of your stocks should be at or near all-time highs. I'm going to go through a bunch of names here today, and when you have a day like today, people tend to want to, have fear of missing out, and you're not going to own all the stocks. Don't even try. I've mentioned 3 areas that I think are really, investable for longer term. Nvidia and the AI play is certainly one. And the auxiliary plays around it, the software, hardware, networking, and also the power plays. And this is Constellation Energy, which I believe is going to benefit longer term from the AI build out. And all this did is break out of a base and broke out to new highs. Yes, it went up about 20 to 25%, pulled back to its 50 earlier this week. And I know people were getting bearish, and I understand it. Sentiment was pretty bearish. But, the Nasdaq was only like 2% off its high. So this one did pull back and then bounced off its 50 today. This is one day, folks. I mean, I don't know where it's going to go from here, but to me, I would expect a little bigger bounce in this. 11.4% off that high. You can see the earnings line going higher on the weekly. Constellation looks good to me. Another one that I like in this group is Vistra. VST, and this one, pulled back to its 21, essentially undercut the 21, and now the 21 might act as resistance there at 92.91. So I'm watching for that one, but I would expect this one to bounce as well. 14.2% off of its high. So that's a nice pullback there. I mean, it's not a base, but it's a pullback. And then the last one I'm going to go through on this electrical power construction. This is Power Quanta Services, undercut the 21. Now this one looks stronger than Vistra. How do I know? Because it's above its 10 EMA. Pull back under the 21 and it's above, and Vistra pull back and it's below. You see the difference there? The magenta line is a 21. So you want to see Vistra power through that level. All right. Some other type of auxiliary type of energy plays is the solar group, which has been very strong. First Solar looks fantastic. You can see, this breakout to new highs, and then now it's pulling back, like this flag pattern here. So this looks fantastic. Traded up 2.5% today, and that one looks very good. First Solar and then NXT. These are the two leaders in the group, and I like this pullback here within the cup area. So this one's going to go on my ready list as well. This is like a bull wedge pattern as it pulls back to a moving average. Yeah, I was up 4.6% today. And I really like this chart here, and the fundamentals are fantastic. It's 10% above the 21, so I might want to wait till it's a little closer to the 21, 4.8% above the 10. But the chart is setting up here in a nice cup. I'd like to see it tighten up a little bit there, but yeah, I mentioned the fundamentals. You got triple digit, earnings growth, accelerating 23, 38, 42. Sales growth. So this one looks strong. You can see the earnings line heading due north. So if you want an alternative, an energy solar type of play, this is a very good one. And the other one is Enphase. I was going to put this one on our ready list because it's consolidating in this stage 1 base. And it's a laggard compared to First Solar and the NXT. But Enphase, I could see this one breaking out of this consolidation above, the 135 area here and really making a move. If you look at a weekly chart, you can see this huge sell-off, and now it's just forming this base. So this could be one that you could hold for a year and not have to pay Uncle Sam as much, which I like. That appeals to me because I'm tight and I don't like to pay Uncle Sam. Anyway, I'm going to get out of that group and go to the hardware. I mentioned some of the auxiliary plays around Nvidia and the AI play, and the hardware stocks certainly are a group that is a cyclical group. This is data storage, Micron technology. I think I show this all the time, but you can see this is a cyclical group, and now the earnings fell off to the lows, and now they're rebounding. So you're at the beginning of a new up cycle in their their uptrend in their business cycle. So to me, I have Micron on the ready list, and it did shake out. This is a nice shakeout. This 3 days here down by the 50, and then it bounced. And now today, it really bounced nicely, 5.5%. I'm going to leave this one on the ready list. I don't think you're chasing it, until it's up above about, I don't know, about 137 area. But it is getting extended from the MAs. It's 4.1% above the 10. So you might want to let it settle down, hopefully have an inside day tomorrow. Anyway, that one looks good. Western Digital, another one, looks pretty similar to Micron, where it had the cup with handle pattern, then had this shakeout, 1, 2, 3, 4-day shakeout to the 21, blasted higher today, 4%. That's good action right there. Pure Storage, Charlie Giancarlo's company. This one had an earnings report and ran up, and then went up the flagpole, came down the flagpole, and it just pulled back to its 21. Technically, all it really did is just pull back to its 21. Had a little shakeout, and now trading higher. So if you bought it near the buy point, you're gold. If you bought it, on that pullback, you're gold. But I wouldn't chase it here. It's 4% above its 10 as well, up 5% today. Wait for a pullback. Embrace pullbacks. Don't be chasing things. Don't have FOMO. You have the discipline to sit out, and wait for your pitch. Seagate Technology, another one in this group. Nice shakeout to the 50 and a blast higher. Nice 5% move. So that group looks good. I mentioned hardware. More hardware is the data center group. To me, Supermicro is more of a pure play on data centers. This thing is just basing, doing nothing wrong really. I know people want to say it's a top, but to me, it's in a base, okay? And if they continue to deliver triple-digit sales and earnings growth, it's not going to stay in a base forever. Nice 4% move today, got back above 800. Dell is another one. This is not quite as pure play on data centers because they have, other components, but today Dell, no, yeah, it had a double inside day. No, it didn't. It got above yesterday's high, 139. Yeah, it's okay. It's just pulled back to its 50 and now it's starting to rebound. Just got to give this one some time here. A lot was expected as on the end of the print and earnings, and then it sold off as earnings weren't as robust as expected, and now it's going to start to rebound, I think. Anyway, and then VRT, another one that pulled back. This is far away from a base. It's October was its last base. I don't know if it's going to base here. I don't know if it's going to make a V recovery. I don't. But when it trades down to the 50, it could do one of three things. It could just undercut it and keep trading lower. It can bounce like it did, or it could just form a base here, below 100 for a couple of weeks or 5 or 6 weeks and trade sideways. So to me, it's not out of the woods. Yeah, it bounced, but it's still 11% off of its 52-week high. So it's definitely one that I'm interested in and watching. And yeah, anyway, that's it for that group. I have to get to the. I'm sorry I'm going so fast here today, but there's a lot to get to. And the restaurant stocks are definitely feeling some love today. This is Dutch Bros. I really like the setup. I put this one on our ready list as well. As it has this downtrend line, breaks out of the downtrend line, but it had higher lows, so it's had this little flag pattern. I mentioned, these stocks that go straight up from the bottom, typically that take some time, right, to consolidate here. So it went sideways for a little bit, started getting tighter and tighter, and today blasted off. Nearly 8% move for Dutch Bros. I think they're taking market share from Starbucks. Institutions, when they they build a position in a company, they don't do it in a week or a month or a quarter. They do it over a few quarters. And when a company reports earnings, like you could see this earnings line heading due north, the institutions have to reconfigure their models and figure, this thing's earning more sales and earnings than we expected, and we thought it was a $30 stock. Now we think it's a $50 stock. So why buy it at 50? Why wait to 50? Let's buy it here at 30, and now 35, and pretty soon 40. So Dutch Bros, I think this is another one that could be a longer term play. We don't have to pay Uncle Sam, might be able to hold this one for a longer period as trends change, in the coffee trends, consumers are fickle, and Starbucks losing some share for whatever reason, and Bros is definitely taking share. Anyway, you got to watch those trends. I went through that, I believe, on my weekend video, and I might do it again because I love the retail trends. Sweet Greens, healthier option than McDonald's or some of the fast food, Jack in the Box or Wendy's or whatever. Burger King. This is another one that I had on my ready list. Why? Because it had this bull wedge pattern once again, pulling back to its 21 EMA. I think I put this on Monday. Yeah, I put it on Monday. And it didn't pop immediately. It was higher the first couple sessions, but today really popped, and that's what you want to see in a bounce. Yeah, just up, 0.25%, 0.5%, and now today it really moved 12.8%. So I got to give myself a pat on the back. I did buy Sweet Greens because of the chart setup. There was another one that I posted with that type of bull wedge pattern there. Once again, it had this power earnings gap like Dutch Bros, right? Up 33% on May 10th. So, then it pulls back to a moving average. Institutions aren't going to buy all at once. They're so big and spending so much money. They have these huge elephant footprints, in the stock. So, when you see that, the institutions are supporting this stock and they want more of it. Sweet Greens is one of them. CAVA is another. Didn't have that big, massive earnings gap, but this has been a big runner, and you got to look at the weekly here on this IPO chart. So yeah, it had this, this institutional due diligence phase, which ended. Now it's kind of pulled back to that area, and then now it's in its advanced stage, trading higher. CAVA looks good. If you don't have a position, I wouldn't be chasing this stock, but it definitely looks good. Wingstop had a milestone today where it traded above 400. Yeah, closed above 400. So congrats to the longs, up 6% at Wingstop. And I'm showing you a bunch of these retail names that are going up, and it's pretty easy to find them. But I like the action in ELF. You think, oh, what are you, crazy? The market was up and this is down 2.5%. Yeah, like I told you, you don't want it going straight up because then it's going to get here and then pull back. So now you just want it to trade sideways. All it did today was pull back to its 10 EMA. And if you don't own ELF and you want in, you just got to be patient here and let it settle down, around that 180 level. Here's the 182 area. This is an area of interest to me. And then you can see it broke above the downtrend line on that earnings report. So just let it calm down, let it go sideways. It's definitely one that I own and I'm watching to maybe add further because I like the growth story in ELF. And I think this is another one that can be held for longer term as it's taking market share from, Revlon, Maybelline, Estee Lauder, and all those other cosmetics companies. Anyway, I just had to throw that in there. Not all stocks went up today, and not all stocks are at all-time highs, but they're still attractive to me. This one is 16.7% off of its all-time high, but to me, it's doing nothing wrong and just consolidating in a base. And stocks are going to need to form bases, and that's how they move higher. Like it did here before. This base here from 138, then it ran up to 221. Now it's forming another base. To me, ELF looks fantastic. Definitely one for your watch list. Keep an eye on that one. Anyway, there's 3 drug stocks that I really like. I think I talk about them every day. Novo Nordisk is one of them because it's part of the 3-legged stool that I believe is a long-term investable theme, and that's the AI, the AI hardware, software, networking, all those components, the AI build out, the energy component, and then this investable theme in longer term, the obesity drugs, which have patents for 10 years. This is going to be, these guys, Novo, are playing the long run. And you say, why does it go up now? It formed a base and now it's going up. Well, it just goes up when it wants to, not when you want it to. And so this is one that I have tucked away in my retirement account for a long time. And so, yeah, it's breaking out in a base. I just have to acknowledge the massive amount of shares. So this is not going to be a fast mover with 3.4 billion shares outstanding. It takes a lot of demand to move. Yeah, I did notice the on the weekly chart, up 4.2% this week with 25% above average weekly volume. And it's got the blue dot, with the RS line going through its moving averages. So this looks textbook here for Novo, and still actionable in my opinion. Lilly, they had their CFO pilfered by Alphabet, and you think, oh man, it's down on that news. What the heck? She's not going to help sell any drugs, but it's just psychological type of thing. Lilly has enough talent in the bullpen for it to survive without the new Alphabet's CFO. Anyway, Lilly just doing nothing wrong. It broke out of a base, pulled back, and the closer it gets to that 10 EMA, the more likely I am to, what is it, 1.9% above the 10. It closed there. You see the breakout of that double bottom base moving higher, and that blue area is like, that's when it's getting a little stretched, but it pulled back in today. So to me, I'm going to leave Lilly on, it's extended, but, still actionable, I believe, below like 840 or so. And this is another longer term franchise type of name that you just put it away in a retirement account and don't sit there and day trade it every day. Vertex is another one, my favorite drug stocks. Now, this is more extended than the others. And this is another textbook pullback. It's got this cup with a handle. The pullback is only 2 days here, and then it bounced, didn't even make it to its 21, and now 1, 2, 3, 4, 5 days in a row, this thing is just blasting higher. Vertex, fantastic stock. Yeah, I've had it on the ready list this week, up 6%. We'll take that every week, won't we? I think we will. Anyway, there's a lot of drug stocks I can get to, but to me, I mean, I'm not going to mess around with speculative biotech names that, do this, or even, even more established names that do this kind of junk. I'm not interested in that. I know a lot of people like Pfizer. I just can't get into it. Another one with a ton of shares, 5 point, nearly 6 billion. So, they're slower movers. It just, to me, I'm going to stick with what's working. And if it's not broke, don't fix it. So I'm going to stick with what's working, and that's working for me. So Lilly, Novo, and Vertex, that's my jam in the drug area. All right, I got to get to some software names. Sorry, I'm going long today, but there's just a lot to get to, and I know I'm rambling on, but this one gapped higher, then pulled back to its 21 EMA, and this bull wedge pattern, which is similar to Sweet Green, which I posted on the ready list on Monday, I believe. This one's only up 2.6% this week, but it's still up 2.6%. We'll take that. This one has the earnings line heading due north, which I like. It had KKR selling 17 million shares following that earnings gap higher. What day was that? Back in May. The power earnings gap on May 9th, 14.5%, now pulled back to a moving average. To me, that still looks good. It still looks actionable. And had a nice day today, up 2.5%. Another one, Spotify. This one, like Elf, didn't go up on a day where everything was up. Oh my gosh, it's a terrible stock. But it's just pulling in. It had a nice run here, bounce off the 50. And so, went from what, 292 up to 331. Now just pulled back. It's getting a little extended from that 10 EMA at 4.2%. So keep your eye on that one. If it comes back to that 320, below 320 area, and the moving averages start catching up, maybe we can buy a kiss off the bounce there for Spotify. That looks good to me. Wix is another one of these software names that gapped higher on earnings. This one powered out of a base. This is textbook stuff. Pulled back to the 10 and now bouncing higher, up 5% today. Wix looks fantastic. And another one, CrowdStrike reported earnings last night. I posted, some of their slides. I think this is one of those companies that, is taking market share again. The trends, are hard to, you don't want to fight the trend. You don't want to fight the tape. And this is one that is taking market share, and they believe in their story. They have tremendous leadership in George Kurz. He's got very high conviction in his company. This stock was up 12% today. To me, it's actionable here above the 50. I wouldn't wait to that 358. But if you want to, you can. But to me, that's a nice bounce from CrowdStrike. You want to look on different time frames. You can see this, earnings line just heading due north. Nice consolidation, the shakeout here, and now it's starting to move. So CrowdStrike looks fantastic for these old eyes. And another one that I like that, gapped higher in earnings. This is why we pay attention to these earnings gap. This one gapped higher 15% on May 10th. Traded down as low as 22, and now it pulled back to its 10. Found support up 2.5% today. This one looks good to me as well. But, like I said, straight up from the bottom. So it took a couple of weeks for it to consolidate. And now this week it's up 2.5%. So, doing a little better than some of the other ones in that cohort. All right, I got to get to the medical stocks. Intuitive Surgical, one that I may or may not have on my ready list, popped today. We pull back to a moving average. So you get it close to the moving average, and that's what I like. I want them near a base, close to a moving average. And this one popped 2.6% today, and it's up, nearly 4% on the week. I'll take 4% on a week. If you got stocks like Novo and Intuitive Surgical going up 4 and 5, 6% in a week, we'll take that all day. Lantheus is another one of these power earnings gaps from May 2nd. So it's only been a month, right? Just consolidated, lollygag, mark time, pull back to a moving average, and now trading higher. So Lantheus looks good to me as well. And then the last one in this group is Transmedics group, gapped higher on May 1st. So it's been a little more than a month. Ramped higher, just pulled back to moving average, found support, now moving higher. So Transmedics looks good as well. And I got to get to some of the crypto names. Coinbase is one that I like. I don't know if I put this on my ready list or not. I think I did. If not, I'm sorry. It'll be on tomorrow. This one was up 3% today. This one's looking solid. Undercut the 50, traded above it. Now it's trading tight within the base, moving higher, still trading within the base though. Trading tight in the base. That looks fantastic. 10-week base, we like that. Hood is one that I've had on the list, and that 2055, and it's just kind of marking time here, allowing the moving averages to catch up. Nice bounce today, nearly 4%, but to me, this is still actionable. You can see that 7-week base, and it is pushing away from its base, up 3.2% this week. And the last one is MSTR. And I don't think I did put this one on, but this one is actionable as well, up 3.4%. The crypto names are just doing fantastic. Anyway, that's it for me today. Thank you for watching. There's just a lot going on. Don't try to catch everything. Don't try to be a hero. Wait for a pullback. When we have a day like today, there's going to be some profit taking. So maybe your favorite stock will pull back to its moving average and offer a better opportunity. So don't be chasing these, these stocks that are ramping higher, because you're going to get shaken out on a pullback. Anyway, I did say that's it for me, except for I lied in honor of the great Steve Jobs. One more thing. I have to go to the earnings reports after hours, and I know you're interested in Smartsheet, up more than 12%. This is a computer software name that has been beaten down like many of the software names. But I didn't look at the report, but obviously it's being well received, up nearly 13% after hours. I'll have more on this in the morning. And then, I don't think Smartsheet's going to drive the software names like a ServiceNow or a Salesforce, but Lululemon could be a boon for the retail apparel shoes group tomorrow. I say could, but it's up more than 10% after hours. I have to look at the earnings report a little closer, but you can see that, it's every disaster is priced in here as it's sold off. And that's the difference between going into an earnings report, sky high, and all-time highs like Dell, or, selling off in front of a report. And then you get some of like a relief rally when things aren't that disastrous. I have not looked at the report. I don't know. Speaking of which, CrowdStrike, it sold off before the report, then gapped higher in a strong report. Dell, all-time highs, and they reported, we're going to sell, take some profits. And technically, it just pulls back to moving average. So anyway, that's it for me today. I'll have more in the morning. A lot of our stocks are working, they should, it's still a stock picker's market. A lot of people are really negative on this market because the leadership is narrow. You really have to be in the right stocks. I mean, the first thing I look at in the morning is, what's going good and what's going, down. When I look at defensive names like Target, this thing's down. The consumer, I should just go to the XLP. This is, if I'm looking at this, I say, this thing's kind of weak today, or the utilities, the XLU is weak. Where's the money flowing to? Well, it's flowing to, technology and, the XLK or the XLC, these ones, that's where the money's flowing. So that's where you might want to think about buying or trading or, that's just what I look at in the morning to see where the money's flowing. I don't jump right in, and I do like the retail names. Anyway, I'll have more in the morning. Like I say, our stocks are doing really well. Not all of them. Man, this Melly, I put this on the ready list, and as soon as I did, it just fell out of bed. Melly is smelly for me. Yeah. And anyway, that's part of the game. Sorry, folks. There are a lot of winners. That is one loser. Thank you for watching at mcstockcharts.com. We never give up.